If you're looking at buying a car wash, you do not want to miss this video on how to get that car wash business funded. Now, SBA financing is usually the right backbone for buying or building a car wash, but there's a critical piece it doesn't cover. It's exactly the piece that stalls most buyers, and here's how the whole thing actually fits together. So, how car wash financing actually breaks down. Car wash financing is really two separate problems. Most buyers focus all their energy on the first and get blindsided by the second. Problem one, real estate and equipment, financed through an SBA loan in most cases. Problem two, a required equity injection or gap. You must bring yourself on top of that loan. Now, why SBA is the backbone here? SBA financing works well for a car wash because the collateral, real estate and equipment with resale value. Real estate and equipment with resale value is exactly what SBA lenders want to see. SBA 7A fits acquisitions with documented membership revenue and cash flow history, or an SBA 504 fits ground up construction if you're building a new one. It's fixed rate on a large chunk of the project, long-term structure. Both loan types are built around real estate and equipment as collateral. So what SBA actually requires from you? Here is the number that catches people off guard. SBA lenders require an equity injection between 10 to 20% typically of the total project costs, and where you land depends on your situation. You've also got to take into account the working capital needed to get profitable, hire staff, buy equipment, make sure you're getting through those first few months of rental payments if it's buying one as well. Established acquisition, strong documented cash flow often lands you at lower end, closer to 10%. New construction, ground up builds or first time operators typically land at the higher end, closer to 20%. So the environmental catch. Car washes get extra scrutiny because of water and chemical use. This is a step many buyers underestimate, and it can derail an otherwise solid deal. So phase one, environmental site assessment required by SBA lenders before approval, no exceptions. Key scrutiny areas, water discharge, chemical storage, and stormwater management are all closely reviewed. The risk, unaddressed environmental issues can significantly delay or outright kill the deal. So the timeline reality, set your expectations correctly from the start, and with the seller, car washes are treated as special use properties, which means stricter underwriting than a standard commercial loan. 60 to 90 days to approval, typical SBA approval timeline for car wash deals, and a 1.25x min DSCR. That's a debt service coverage ratio lenders want to see, clearly documented, not estimated. Where most buyers actually get stuck, the loan itself can get approved. It's the equity injection that stalls deals at the finish line. Coming up with 10 to 20% of the project that often runs into hundreds of thousands or more in cash isn't simple. That money doesn't just appear because the loan got conditionally approved. This is the part that trips people up, and it's almost always the last thing buyers plan for. So your SBA loan approved, financing cleared for real estate and equipment. Now you need that 10 to 20%. Deal often stalls there. So how to actually cover that piece? 3 tools exist to cover the equity injection without draining your savings, each suited to a different situation. So HELOC is the only gap solution that we've got that's actually recognized by SBA lenders. Against a home or investment property you already own, SBA lenders accept it as long as it's serviced from income outside the deal. You can't service that HELOC from the future revenue of the project you're acquiring or building. Rapid gap funding, so unsecured term loans, no property required at all, covers the injection on credit strength alone. However, your DTI still needs to be approved for the SBA, and also you're going to want to maybe think about using this for working capital once you're in the deal. The same for 0% credit card stacking, best for the smaller end of the injection, no collateral required, zero interest during the intro period. Now, this runs along SBA, not instead of it. None of this replaces the SBA loan. The structure doesn't change. SBA still finances the real estate and equipment. What changes is how you show up to the equity injection requirement. With the cash already sorted, instead of scrambling for it after your loan gets conditionally approved. So SBA loan covers real estate and equipment. Equity tools cover the injection requirement. Deal closes, 2 problems solved, working together. Now, what actually qualifies? Each tool has its own qualification bar. Knowing which one fits your profile before you apply saves significant time. So HELOC requires real equity in a property, home or investment property, and income outside this deal to cover the payment. both conditions must be met. Rapid gap funding typically starts at a 680 or higher FICO score, no property collateral needed. This is unsecured. 0% stacking works best covering smaller slice of the larger injection, not the whole amount on its own. Head over to our toolkit in the description to see how you can use these credit limits to pay invoices or liquidate as cash into your own bank account as well. Now, the honest caveat, better to know this early than find out after you're deep into an SBA application. If your credit or income doesn't support any of these three tools, the equity injection still has to come from somewhere. In that case, a seller note or documented gift from friends or family might genuinely fit your situation better. And these are legitimate paths, they just require different structuring. The key is knowing which path applies to you before you already committed to a deal timeline. Now, how we help with this. This is exactly what we help car wash buyers work through, matching the right tool to the right situation, structured so it's ready before your SBA lender asks for it. Assess the size, match the tools, structure ready. The goal's simple, you show up to your SBA lender with the equity piece already solved, not scrambled together after conditional approval. Now, book a call, gapfunder.com/apply, link in the description below. SBA is still the right backbone for most car wash deals. The equity injection is just the piece nobody warns you about early enough until now. So, key takeaways, 2 problems, 2 tools. SBA covers real estate and equipment. A separate tool must cover the equity injection. Expect 10 to 20% on that injection, and there's 3 paths to cover it. HELOC, rapid gap funding, or 0% credit card stacking. Each fits a different buyer profile. You can also go for business term loans or business lines of credit if you run another business, doing at least 20K a month and you've been in business 2 years. Plan early, have the equity piece structured before your SBA lender ask for it, not after. Let's go close a deal. And if you adored this video, smack that subscribe, flog the bell, and I'll see you on the next one.